The three developmental modes of training. Now I gave you the broad skill sets that you have to learn to create consistency well within. Those broad skill sets are within the what I call three developmental modes of training. There's mechanical training, subjective training, and intuitive training. Mechanical training. There's three stages, in other words, in mechanical. What you want to do is you want to trade with a rigid criteria that defines your edge. All execution decisions are made in advance of market activity. The market either confirms or conforms to your definition of an edge or not. And you execute your trades based on a plan. In other words, what you're doing in the mechanical mode of trading is you're limiting the number of variables that you're dealing with in the market, because what you want to find out is this. You want to find out what works and what doesn't. This is where to find out what works and what doesn't. You can paper trade in other words, you can actually take a particular trading strategy and methodology and forward trade it with paper trading, or if you've got software that does the analysis for you, can do it that way too. But it's better to probably paper trade it so that you're actually interacting with your particular variables that are defining an edge, so you're finding out what works and what doesn't. If you use an unlimited number of variables and define an edge when you're training randomly, you never find out what works and what doesn't. So you have to learn that you have to have confidence in that. But the other part of it too is finding out whether or not your own personal psychology is made up in a way that you can actually execute that edge. And the problem with the execution part of it is that paper trading doesn't cut it. You actually have to have money on the line. And so what you do in the mechanical stage is that you use the mechanical stage as a means to learn trading skills. In other words, your focus is on skills, not necessarily on how much money you're making or not making. Because when you've acquired the appropriate skills, the money will simply just be a byproduct of those skills. And then what you do is that if you find that you cannot execute your plan, then you're going to have to get into a mode where you learn exactly how to do that, which is what we're going to get into later on. But the point is that what I recommend to people is that if they're having problems executing their trades, in most cases is because their position size is too large. In other words, if once they learn that there's a specific regimen in which they can learn to be consistent, you know what they want to do is they want their cake and eat it too. Sort of, no, they want to learn the techniques, but they don't want to cut themselves off from still making a lot of money, when the reality is they don't have the psychological skills to be able to execute trades based on the way they were trading before. So if they were 5,000 share trader before, they'll set up these exercises that we're going to talk about later on the afternoon with 5,000 shares and then completely blow it and can't do it. The reality is their psychological makeup is such that they may only be able to do it flawlessly with 10 shares. So I work with people who had to go down to 1 to be able to execute it flawlessly. They had to go down to 1 share, and then they work their way up, and they go to 2, and then they go to 5, they go to 10, they just work their way up. Music. I mean, is there anybody in this room who hasn't paper traded, and is there anybody who has an experience being able to execute your trades flawlessly on paper, but that when you try to execute your plan with real money, it doesn't work? See, the plan's working, you're not working. This is what mechanical training is all about. Okay, mechanical training is finding out just how big that gap is. You cannot take for granted that, because you recognize an opportunity to enrich yourself in some way that you have the skills to be able to take advantage of it appropriately. You can't take it for granted. Everybody does. So mechanical trading gives you all this information. It tells you what works and what doesn't in the market, and what works and what doesn't with you, so that you know what you need to focus on to be able to make consistent money. You guys with me on this? Is it making sense? Music, subjective trading. Okay, then you can evolve if you want to. The subjective stage of trading, because you can make consistent money trading mechanically. Okay, but most people like to be able to use their rational thinking and process and try to figure things out, and the subjective stage of trading is simply, this is a broader, more flexible mode of trading, where you use everything you've ever learned about the price movement to determine your edges. In other words, you know all the different patterns you've learned, all the different nuances of. Market behavior will determine, where you get and how much profit you take, where you set your stops. You see, in the subjective mode of trading. In the subjective mode, if someone said to me, okay, I'm buying here, and my stop is here, but the mark is starting to come down to my stop, and I get out right here, and I don't let myself get stopped out of my original spot. And it truly, for someone who's involved in the subjective mode of training, that's all right. You can do that because you're not doing it out of fear, and you're not doing it out of the fact that you haven't accepted the risk you're doing it, because you recognize the pattern that the market is giving you as such, that there's a high probability you are going to get stopped out, and so therefore you might as well just scratch your trader or get out with it with a little bit of a loss. It's not because you're afraid. There's a huge difference. You guys with me on this? And the last stage is the intuitive trading. This is the most advanced mode of trading. It would be the equivalent to getting a black belt in martial arts. It's when you find yourself in the zone, tapped into the collective consciousness of the market, giving you a sense of the flow. If you look at the market as being a collection of individuals, you can tap into that. You can find yourself. It's not something you will yourself into. You just find yourself into in this zone where you're just seeing and doing things that you can't necessarily explain at a rational level. And the problem is that there are people. Everyone has intuitive capabilities. There are, but some people, it's completely shut off, and with others, they don't trust it, because they can't make the distinction between what's intuition and what's just their mind, hoping that something's going to happen, or hoping that what they see is really what's going on, and making it feel like intuition. The problem is, until you acquire these fundamental skills that we're talking about, you definitely don't want to be trading based on intuitive impulses. Just want to make note of them. When you've got the skills and find yourself in the zone, then go ahead and do whatever comes to your brain until you flip yourself out of it. Meaning, when you start thinking at a rational level, you flip yourself right out of the zone. Because your rational mind wants reasons. Your rational mind wants logical reasons, and these intuitive impulses don't come from that part of your brain. They come from that creative part of your brain, and by definition, creativity is bringing something forth that didn't previously exist. It may exist somewhere in the world or in the universe somewhere, but it didn't exist in your mind, and it's outside the parameters of what you already believe. So there's going to be an instant conflict between what you think at a rational level and your intuitive impulses, until you train your rational mind to accept your intuitive impulses